If you don't have a lot of money but want to start investing, where do you begin? In today's video, I'm going to tell you about the 3 best Vanguard ETFs that you can start investing in with as little as $200. The thing is, you don't need thousands and thousands of dollars to get started investing in some of the best low-cost diversified index funds available on the market today. And arguably, Vanguard's index funds are some of the best index funds available for passive investors. And because of Vanguard's ETFs, their best index funds are available to just about anyone who wants to start investing with even less than $100. Before I get into the ETFs, you may be new to investing and wondering, what are ETFs and why are they so great? Well, ETF stands for Exchange Traded Funds, and they are funds that own a collection of securities like stocks or bonds or commodities, and they're usually tracking some kind of index, like a stock index like an S&P 500 or a bond index or a commodity index. Usually the shares of the ETFs are trading on some kind of exchange like the NYSE or NASDAQ during normal trading hours. Now, there are 4 reasons why I think ETFs are such great investments. The first reason is that ETFs allow you to start investing with very little money. So there's no minimum investment requirement. But you just have to be able to buy that one share, which are often $100, $50, $200. They're not that expensive. So you can get started investing a lot sooner than having to save up a chunk of money. The second reason why ETFs are so good is that their expense ratios are really, really low. They're often lower than index funds, and they're for sure lower than mutual funds. The third reason is that ETFs are more readily accessible to through different brokerage accounts. Like if you want to buy a Vanguard ETF through a Fidelity account, you can definitely do that. Whereas for index funds and mutual funds, it's a little bit harder to do that, and it's a little bit more pricier. And the fourth reason is that ETFs are often more tax efficient than mutual funds, and often even more tax efficient than index funds, simply because of the way they are structured. Now, you may be wondering, are ETFs and index funds the same thing? And to some extent, yes, they are the same, but there's also differences. And in some situations, an ETF makes more sense. In other situations, an index fund may make a better option. And so I break this all down in this video right here, where I tell you about the differences and similarities. So be sure to check it out. I'll also link it down in the description. And while you're down there, don't forget to hit that like button and be sure to subscribe to my channel so that you don't miss on any new videos to help you grow your wealth and achieve early financial freedom. That being said, as I go through each ETF, I will reference the ticker for the index fund equivalent so that when you decide which fund you're going to go for, you know which ticker to look for. And as a quick reminder, don't forget the expense ratios that I'm referencing in this video are for the ETFs only. The index funds may be different, and so be sure you don't overlook that part. And real quick, there are different companies that offer index funds and ETFs, but I will argue that Vanguard is definitely the one that stands out from the crowd for 3 reasons. The first reason is that Vanguard is the pioneer in low-cost index investing. They have the longest track record of being committed to lowering costs and making passive investing more accessible to investors everywhere. And so I think that stands for something. I think that consistency and track record is definitely noteworthy. The second reason is that Vanguard has some of the lowest expense ratios in the industry. Now, there's a few companies like Fidelity who have come out with 0 expense ratio funds, but a lot of other companies continue to upcharge and put a lot of cost to investors to invest in index funds. And if you want to see some of the worst index funds, in my opinion, be sure to check out this video right here, and you'll see examples of how exorbitant some of these expense ratios and sales charges can get. The third reason why I think Vanguard's great is because they have some of the biggest funds and ETFs in the industry, and that matters because with size comes economies of scale, and they're a lot more efficient, and by being efficient, it reduces the cost to investors. Also, Vanguard has some of the lowest turnover rates in the industry for their funds, because if you think about it, it's mostly passive investors who flock to Vanguard, and they don't really sell their stocks, they don't sell their positions, they just leave it and just let it grow, and that makes it cheaper for everybody else in the fund. In summary, Vanguard's built and tailored for passive investors, and it's unlike any other firm out there in the industry. The first Vanguard ETF that I want to bring to your attention is Vanguard's Total Stock Market ETF, or VTI. The index fund equivalent of this is VTSAX. Now, if there's only one ETF you could hold for the rest of your life, then this ETF would be it. It's got a rock bottom expense ratio. It's super diversified, and it's just got a really good track record of helping you grow your wealth. Right now, it's trading at about $170 per share. And if you look at the ranking of some of the largest ETFs, this is definitely one of them. So you'll be in good company. Now, this ETF is tracking what is known as the CRSP Total US Market Index. And this index is comprised of about 3,500 publicly traded companies across multiple exchanges. And right now it's heavily weighted towards technologies simply because that's just technologies have been going on a tear recently. But if you're interested in learning more about this fund and this index, be sure to check out this video right here where I talk in depth about VTSAX, and some of the basically all the things that I talk about in that video applies to VTI. Now you may be wondering, why is it such a good ETF? Well, other than being just really well diversified across numbers of companies, both small and large, geographically, different sizes, different sectors, it's got a rock bottom expense ratio of 0.03%. And you'll know that if you look at my video on the worst index funds ever, that expense ratios make a huge difference in terms of how much wealth you see grow in your account. And so be sure to check out that video if you haven't, because it's gonna be eye-opening to see just how expensive index funds can get and how amazing Vanguard is with this ETF at 0.03%. Now, I want to briefly mention that Vanguard's total stock market ETF may sound a lot similar to another ETF that Vanguard has, which is called the Vanguard S&P 500 ETF. The stock ticker symbol for that is VOO, and it's tracking the S&P 500 index. Both VTI and VOO have the same expense ratio of 0.03%, but VTI and VOO also have the same performance, except VOO is a little bit less volatile compared to VTI because it's tracking the S&P 500 index. That index comprises of about 500 of the largest US companies, and it's going to exclude the smaller and mid-sized companies, which tend to be a little bit more volatile. They tend to go up and down a little bit more in terms of their stock prices. So right now, VOO is trading at about $300 per share, so it's a little bit more expensive than VTI to start investing in. Now, if you want more information about the S&P 500 and VOO in general, be sure to check out this video right here where I talk about the index fund equivalent of VOO, which is VFIAX. I think you'll find that video helpful if this is the one that you're more interested in investing in. The next Vanguard ETF that I'm going to recommend is Vanguard's High Dividend Yield ETF, or VYM. The index fund version of this is called VHYAX. Now, the ETF is currently trading at about $95 per share, and the ETF is tracking what is known as the FTSE High Yield Dividend Index, which is about 400 companies that have above average dividend yields, excluding REITs. If you don't know what REITs are, stick around because I'm going to get to those in just a moment. Right now, this fund is heavily weighted towards consumer goods, financial services, and healthcare companies. And right now, the dividend yield on this fund is 3.3% as opposed to VTI's 1.77%. And so this ETF is really meant to provide a steady stream of dividends and dividend income from value companies. So why is it such a good ETF? Well, this fund has a collection of really high quality companies and that have been paying dividends for a while, and dividends that are above average. And so if you're looking for an ETF that will produce you income now as opposed to later, then I think you should seriously consider this ETF. The next ETF is the Vanguard Real Estate ETF, or VNQ. The index fund version of this is called VGSLX. Now, the ETF is currently trading at about just under $100 per share, and the real estate index that this fund is tracking is made up of around 180 REITs and other real estate related investments. So you may be wondering, what are REITs? Well, REITs are a special type of company in which they own or operate different types of income producing real estate, like a warehouse or an apartment building or a mall or like a hotel. And so they're a special class of companies that Congress had created back in the 1960s to allow just ordinary investors to be able to invest into real estate. And so there's a bunch of requirements that REITs have to follow. And one of those is that they have to pay out most of their income in dividends to their investors. And so that's why you'll see a lot of REITs have much higher dividend yields compared to other companies, simply because they have to pay that out. So why is it such a good ETF? Well, REITs are a good way to diversify your holdings away from just stocks and equity or bonds. And while REITs are somewhat correlated to the stock price movements, they also help lessen some of the volatility you get with just being in stocks. And so if you are looking for ETFs that again produce income for you now rather than later, then REITs and other real estate investment ETFs are a great way to get that income now through dividends. And so VNQ is just one of those ETFs that's a really high quality ETF that I think you should seriously consider if you're looking for dividend income. If you enjoyed this video or found it helpful, be sure to hit that like button down below and be sure to share with a friend if you think they'll find it helpful or interesting in any way. Don't forget to subscribe to my channel if you haven't already so that you don't miss on any new videos to help you grow your wealth and achieve early financial freedom. Thanks for watching, guys, and I'll see you guys at the next video.